All right, my beautiful friends, here we go again. Not good, and I'm not happy. It's the truth. So what's going on? Right now, stocks are under pressure, not by much, way off of the lows. The Dow Jones Industrial Average was down about 150 points. We pretty much cut those losses in half already. Now, what's driving this market today, and where is cash going? Let's talk about the economy. The reason why stocks are under pressure right now is it seems that the lie is being exposed. Our economy is in free fall. We just found out again that U.S. manufacturing literally fell off of a cliff. Caterpillar is getting hammered right now. Look, I don't know another way to put this, but you are being lied to on a grand scale. Our economy is nowhere near booming, and you really only need to look at one thing. And I'm going to go back to this again for the gazillionth time. Something that no politician will ever mention, especially our president. It's called money velocity, the rate at which cash is moving through our economy. We remain near historic lows. Now, you explain to me, if cash isn't moving through our economy, how could our economy be going anywhere? See how simple this is? One metric. That's all you need to look at. It's incredible. You cannot have an economic recovery, boom, or anything without cash moving. Period. Period. The freaking end. Let's talk about the movement of cash here. Bonds are getting bought up right now. The yield curve is inverting further. 10-year yields coming down. Cash is going into precious metals. It's been doing this now for a little while. Cryptocurrencies are getting hit again. And why? Because it's pretty simple in my book. Regulatory pressure. There's all this talk, all this chatter about regulation. So again, I wouldn't be alarmed at these swings. In fact, if you follow crypto at all, you should understand this is a normal part of how they trade. So volatility is the name of the game when it comes to cryptocurrencies, period, the end. I know a lot of you just don't like it, and that's fine. You don't have to. Again, for the long haul, and I can't stress this enough, again, the real long game here is to hold a hard asset, hold gold, hold silver. Now, you see this guy over here? Why is he smiling? Because our economy is in free fall. He knows more easy money is coming. If we know more easy money is coming, I mean, seriously, it means you bet against the debt, become your own central bank, period. Let them play their freaking games, their freaky games with gold and silver. I love it. I love it. I love it. But again, gold and silver are catching a bid. Dollars are about flat right now. Cash is moving into the debt market. Stocks are under a little bit of pressure, although way off their lows, because they know easy money is coming. Believe me, it's coming. And the gap, again, between the economy and the stock market is going to get wider. If you can't see that right in front of your face, for example, on a day like today, well, I don't know what to tell you. That's where we're at, people. I am more than upset how I started off this video with the course of the U.S. economy and how the middle class being decimated right now. Sure, members of the middle class who have a 401k plan, you're doing great. Your interest earning accounts are getting decimated. Okay, that doesn't matter to people. It's all about their 401k plans. It's all about their investments that only make cash when the market goes up. Let me ask you. You think you're smart enough to pull that cash when the market reverses? I doubt it. I doubt it very much. Most people, by and large, by an unbelievable percentile, probably 90%, are going to get cremated when this market corrects to fair value, and it will. All this pumping up is great. People are overly greedy. And, you know, despite the market being near all-time record highs, they think it's going to continue higher in perpetuity. It's not going to happen. There's going to be a moment where this corrects, and then you're going to be left holding the bag of dog shit. That's the truth. The gap between the economy and the stock market will close at one point, and it's going to overcorrect at one point. It's going to overcorrect because nothing is real. and we can expect that the debt bubble is going to get hyper inflated from here. Like I explained to you, world central banks have no choice. They're going to continue to inflate, and I mean inflate. We haven't seen anything yet, nothing yet, with regard to what world central banks are going to do. They're going to own everything. That's the grand plan, which has been going on literally since time immemorial. The wheels have been in motion for a very long time. They are going to be the lenders and buyers of last resort. They want a world that is enslaved to them. They already have it. Most people are beyond their eyeballs in debt. Countries like the United States of America, which happens to be the largest debtor nation in the history of the world, is a slave to their central bank as well. And this is a story with every developed nation. It's incredible. It really is. But the party goes on, and you're going to be told how great everything is. Our economy is as strong as it gets. It's an absolute lie. But you're going to hear more calls from the president for rate cuts, for a weaker dollar, and you will not hear how this is supposed to help you if you're a member of the middle class. All right, with that said, I think this video has been important. Please share it. Please get it out there. That's it. I'll see you at the end of the day.